crushed the challenge in 3 weeks. Clean trades, tight risk management, disciplined execution. The funded account email arrives and you're pumped. This is it. You're officially a professional trader getting paid to trade. Then something weird happens. Week 1 on the funded account. You're overly cautious and miss good setups. Week 2. You overcompensate and start taking trades you would have skipped during the challenge. By week 4, you've hit your drawdown limit, and you're back to square one, wondering how you went from passing easily to failing spectacularly. This isn't bad luck or a sudden skill loss. You fell into the psychological trap that kills 90% of traders who pass challenges. The transition from challenge to funded creates mental pressure that completely rewires how you trade, and nobody warns you it's coming. What I'm about to reveal are the 3 invisible, psychological shifts that happen the moment you get funded, and why they destroy accounts faster than any technical mistake ever could. The money becomes real. During the challenge, you were trading with monopoly money. Sure, you paid for the challenge, but losing didn't feel like losing your own cash. It felt like failing a test you could retake. The moment you get funded, your brain flips a switch. Now you're trading real capital that could turn into real withdrawals. This psychological shift transforms your entire relationship with risk in ways that sabotage everything that worked during the challenge. Your position sizing changes even when you think it doesn't. During the challenge, risking 1% felt easy, because 1% of fake money is just numbers on a screen. On the funded account, 1% represents actual dollars you could withdraw and spend. Your brain starts calculating what each trade could buy you. That euro-dollar position isn't just a trade anymore. It's rent money, car payments, or vacation funds. This mental accounting makes every tick feel heavier. Here's the fix that actually works. Before you take your first funded trade, withdraw your challenge fee from your personal savings and physically set it aside in cash. Put it in an envelope labeled "Challenge Cost Recovered." This creates a mental reset. You've already recovered your investment before trading a single funded position. Now the funded account isn't real money you could lose. It's pure upside you're managing. This small action eliminates the loss aversion that makes you trade scared or reckless. Second technique, never calculate what your account balance could buy you. Seriously, stop converting pip values into groceries or bills. Instead, track your account purely in percentages. You're not up $300, you're up 0.6%. You're not risking $50 per trade, you're risking 0.5%. This percentage thinking keeps your brain in the same mode it was during the challenge when everything was just numbers and targets. Third move, create a withdrawal schedule before you start trading the funded account. Decide right now that you won't withdraw anything for the first 3 months regardless of profits. This removes the mental temptation to trade for withdrawals instead of trading your system. You're not trading to pay rent next month. You're trading to build the account for 3 months. Then you'll evaluate. This timeline eliminates the dangerous "I need this trade to pay for X" thinking that destroys discipline. Understanding how real money warps your thinking prepares you for the second shift that sneaks up on you. The pressure to perform never ends. During the challenge, you had one clear goal with a finish line. Hit the profit target without breaking rules and you're done. That clarity made decision-making clean. Every trade moved you toward or away from a specific objective. The funded account has no finish line. You need to perform consistently forever, and that permanent pressure creates anxiety that didn't exist during the time-limited challenge. Your brain handles short-term pressure better than indefinite pressure. During the challenge, you could push hard for a few weeks knowing relief was coming. You could tolerate uncomfortable trades because you saw the end goal. On the funded account, there's no end. Every month needs to be profitable or at least not hit drawdown limits. Every week matters, every day counts. This endless evaluation creates chronic stress that degrades your decision-making quality. Break the endless cycle by creating monthly challenge simulations within your funded account. Here's how it works each month. You set a modest profit goal and a strict rule adherence goal. Maybe it's 3% profit or 0 rule violations for the month. When you hit either goal, you're done for that month in your mind. You can keep trading if setups appear, but psychologically you've crossed a finish line. This gives your brain the relief it needs while keeping you active. The key is making these monthly goals modest enough that you hit them through normal trading, not forced activity. Second strategy, implement performance breaks every 6 weeks. Mark your calendar right now for a full week where you don't trade at all. During this week, you don't check charts, don't think about positions, don't monitor the market. This forced break prevents the burnout that comes from never-ending performance pressure. Knowing you have a scheduled break coming makes the daily grind feel temporary instead of permanent. Third technique, tracker consistency score instead of just profits. Each week, score yourself on 3 simple questions. Did you follow your entry rules exactly? Did you honor your stops? Did you stick to your position sizing? Give yourself a point for each yes. Your goal is 12 points per month regardless of profit. This creates a performance metric you fully control, removing the anxiety that comes from needing the market to cooperate. You can score perfectly even during a losing month, giving you wins that don't depend on market randomness. Understanding endless evaluation prepares you for the third shift that catches everyone off guard. You stop trading your system. The funded account makes you question the system that passed the challenge. During evaluation, you trusted your approach because it was working. The moment you go live, doubt creeps in. You start wondering if the challenge success was luck. You question whether your system will work long-term. You notice other traders using different approaches and wonder if you should adapt. This erosion of confidence makes you drift from the exact methods that proved successful. The doubt starts small. You spot a setup that meets 90% of your criteria, but misses one element. During the challenge, you would have skipped it without thinking. On the funded account, you talk yourself into taking it because it's basically the same thing. This tiny deviation feels insignificant, but it's the crack that eventually breaks everything. Within weeks, you're taking trades that look nothing like your challenge trades, wondering why your edge disappeared. Lock this down immediately with a challenge playbook. Before taking your first funded trade, go through your challenge account and screenshot every single trade you took. Write down exactly why you entered each one, what criteria it met, and how you managed it. Print this out or save it as a PDF you can reference daily. When you're tempted to take a funded trade, you must find a similar trade in your challenge playbook. If it doesn't look like something you did during the challenge, you don't take it. Period. This removes the guesswork and drift. Second safeguard, create a system modification freeze for your first 6 months funded. Write down your exact rules today and commit to 0 changes for 6 months regardless of what happens. If you want to improve your system, fine, but you test changes on demo while continuing to trade the funded account with your original rules. This prevents the deadly habit of tweaking your approach. Every time you hit a rough patch, your system proved itself during the challenge. Give it time to prove itself during normal funded variants. Third protection, join or create an accountability partnership with another funded trader who knows your system. Every week, you send each other your trades and verify they matched your stated criteria. Having someone else check your work eliminates the mental gymnastics you'll use to justify system violations. You can lie to yourself about whether a trade met your rules. You can't lie to someone else who knows your system and is reviewing your screenshots. Fourth move that sounds extreme but works. Treat any rule violation as an automatic trading pause. The moment you take a trade outside your system or break a risk rule, you stop trading for 48 hours minimum. No exceptions. This creates immediate consequences for system drift that are painful enough to make you think twice before deviating. During the challenge, rule violations meant possibly failing. On the funded account, they should mean mandatory breaks that cost you potential opportunities. This makes staying disciplined easier than being flexible. Comment below if you've lost a funded account and whether you can identify which of these 3 traps got you. Because the gap between passing challenges and staying funded isn't about trading skill, it's about psychological consistency under different mental pressures. Master the ability to treat real money like challenge money, handle endless performance pressure, and stick to your proven system without deviation, and you'll join the tiny percentage of traders who not only get funded but stay funded long enough to actually make life-changing income. The funded account isn't harder than the challenge. It's just psychologically different. and different requires specific techniques you're probably not getting from anyone else.